All right, and we are back. Regular programming will now commence. No? Okay. I thought that was funny. All right, cool. I'm on like my 5th mug of coffee, so at this point I'm just nervous energy. Okay, so we'll move on to the first panel of today, titled Funding and Regulating Africa's Startup Ecosystem. Nadia will be moderating the panel. I think I'll just let her take over and have everyone introduce themselves as we go along.
Thank you. So good morning. Thank you so much for investing your time. Sorry. Yes. Yes, so thank you so much for investing your time with us this morning, Saturday. Today, we will have an amazing panel on the funding of African startup ecosystem, where we will discuss the recent trend and development of the ecosystem, also the challenges faced by the investors, and also the exit opportunities. Our panel of experts will also share the recommendation on how to attract more funding in the ecosystem. So I will give you the format of the session. So I will leave the panelists introduce themselves and then start the discussion with my question and then open question to the audience. So maybe we can start, Maria.
Yeah. Can you hear me okay? Fantastic. I'm Maria. It's lovely to meet each and every one of you. I'm actually an Oxford alum, graduated last year from my MBA. My background into investing actually started from operating, used to scale startups in Africa, did that at Uber as the country manager, did that again as the GM at Branch for 3 years, which is a credit-led new bank. Then moved to the investment side, the dark side, and started investing in really, really early stage startups. So I did that at Hustle Fund, which is a pre-seed fund in the US. And then also again at Octopus, which is where I'm at right now. Octopus is building out a very, very brand new pre-seed fund. And I'm in charge of that alongside my partner, building that out and deploying into really early stage startups in Europe. So I kind of bring that operating, but then also Africa investing and Europe investing background. So that's it on me.
Hello, everyone. Pleasure to be here. Enrique Martinez here. You will recognize from a weird sounding name that I'm a weird mix between Spain and Germany. I was born and raised in Barcelona, but my family's German. I joined the startup ecosystem around 7 years ago, mainly in Berlin. Actually went there because I like techno music. So that's how I ended up in the startup world. After that, joined SpeedInvest in the fintech team, where I focused initially in Europe. Was lucky enough to participate in some of the most iconic rounds in fintech in Europe so far, WeFox, Bitfund, Wayflyer, etc. Really liked it there. And then we said, okay, let's risk it even more. Let's look into emerging markets. And right now I'm heading the fintech team that focuses on emerging markets, everything in the Southern Hemisphere, from Indonesia to Brazil, everything in the middle. We do from a couple $100K up to $3-4 million. And so far in Africa, we've done 5 investments, but we want to do much, much more. And yeah, that's about it.
Yeah, thank you. Is it working now? Awesome. So my name is Mareme. I am from Senegal. And I was previously to 500 at Draper. I was there leading our international investments, specifically in emerging markets. Prior to that, I was based actually in South Africa for a long time, looking at accelerators, basically the early stage, very, very early stage of founders. 500, we are a Silicon Valley-based fund. We have made today about 111 investments in Africa. We have 1 unicorn in our portfolio on the continent, which is Chipper Cash. And we do very early stage investment. So we usually lead rounds at the very early stage. We do anywhere between 100K up to $500,000 and then follow-on rounds. Our mandate is pretty much investor agnostic. So we invest in all sectors. Today, we have 5 active funds across the globe. We mainly invest in emerging markets. So our fund has grown to look more into Latin, Southeast Asia, and Africa now.
Okay. Elom Lassey. I am regional lead for Sub-Saharan Africa with the venture capital team at IFC. Prior to IFC, for all my many sins in many past lives, I'm sure, I started my career in the banking space, doing leverage finance at Goldman, and then moved to join a fantastic team of entrepreneurs who'd built a number of amazing businesses across the continent at a fund called Satya Capital. And then from there, invested and built some entrepreneurial ventures around the continent, and then moved across to IFC, where within the venture capital team, we invest mainly in growth stage businesses. And so looking at ticket sizes of $5 to $20 million in our direct investment portfolio, we've got a number of investments across Sub-Saharan Africa and North Africa. In addition to that, we invest in growth stage venture capital funds. And so we're invested in a range of funds across the continent. We also invest in earlier stage funds. And so we've got a seed fund investment program. And again, on the seed funds space area, we're invested in a few different funds across the continent. And then beyond that, within the wider organization, we have the upstream team that works with earlier stage platforms and helps them with more flexible types of capital to support their development. And then we've got various teams on the advisory side and on the mainstream side to support companies as they graduate into the next stage. And so it's a very exciting place to be. And I think the development mandate and the development finance mandate really supports the institution to be able to take the types of risk that other platforms are not necessarily able to take, and also to have the long vision in terms of Africa. And so I've been in institutions where Africa's been flavor du jour, and then it's become less flavor du jour. We've pulled teams out, pulled appetite. And so, great to have that foundation. I'll stop there.
Okay, so thank you. So let's start the discussion. We'll start by the current state of the industry. So for 2020 and 2021, so the venture capital outstripped the private equity in terms of volume. So from your investor perspective, do you think that VC will be a large source for deals of equity in the next coming years?
My mic's on. I can, yeah, I didn't know I did that. I think this is very interesting because, we've just come off a bull market, and that kind of in the later stage is very clear in Africa. Last year into this year, it was, I think, from 2.4 billion to about 5. There was a huge jump, and everyone was excited. I think the only other continent that grew as quickly was Latin America. And even Latin America, just in terms of the size, the population, Africa is obviously much larger. And then what I find interesting is just the evolution of, VC being this dark arts, no one wanting to touch it, some, really established people in the ecosystem were the only ones who were the angels, to it being more mainstream, people wanting to kind of come on board. And then you have all these international VCs, the heavyweights, the soft banks, the Target Global, and then YC as well, really doing the work on the continent. I think that it's definitely evolved. And just by the nature of, investments for much later stage, the deals are just fewer. It's not because it's larger ticket sizes, but for the earlier stages, you have deals as, little as maybe $25,000 or pounds. And then as a result of that, you see a lot of deals. I think, with the market downturn even considered, I think we will continue to see a huge rise in just angel investing, really early stage investing, pre-seed investing, more because there are now more demonstrable outliers. You can point to things and be like, look at that exit. You can get in early and try to hit those multiples in the next 10 years. And I think the previous panel kind of touched a bit about how it's skewed towards fintech. I think we're going to see many different types of deals beyond fintech. And I actually, ironically, don't think we've scraped the surface of fintech. I think, and it's a very contrarian. So people are like, the continent doesn't need one more fintech product. But I think that what's just happened is the rails being built. You're going to find serious verticalizations. You're going to find serious use cases into very deep networks that are monetizable over time. And yeah, with that all considered, I do think that we will continue to see the number of deals go up, both in the early stage and I guess the growth stage. And just by the design of how funds work, you have fund managers who've had really great success deploying in the early stage, who've gone on to raise even larger funds to deploy. They have that dry powder. It's not going anywhere. That money has to go somewhere to return to the LPs. So I think, at least in the short to medium term, I do think that we will still see the deals kind of go up. I'm curious to hear what the panel thinks.
I think from the perspective of early stage investors, there's two things happening. The first one is VC as an asset class is very new on the continent, and VCs on the continent are basically learning at the same speed of progression than founders, because it's a completely new field to actually have an asset class like that have this level of growth on the continent. So I think that that's one thing. And then the second one is, yes, the actual volume of funding is increasing, but I think Africa is still very, very underfunded. And I think that in order to be able to see the same success that we're seeing in Southeast Asia, for example, we still need a critical mass at the pre-seed and seed stage. And I know that we definitely are working harder to do seed and pre-seed deals, but I think we need a significantly bigger volume of deals at that very bottom of the funnel in order for like growth stage funds to actually be able to pick from a viable pool. And we're seeing it grow, but I think we still have a lot of work to do. And I think more and more we need to build early stage investment as the most important level of funding at this stage, because Africa is still very underfunded.
Thank you.
If I may jump real quick on this one, because maybe here it's German speaking in me. I'm a little bit more pessimistic for the short term. I think we saw a massive boom of especially international investors looking into Africa and saying, okay, this has worked somewhere else. This should work here as well. The market is big enough. It's attractive. Let's invest here. Right now, capital markets are a bit special and they're going down, and all the growth investors are suffering from it. They're losing billions and billions of dollars, and that makes them be much more selective when it comes to amount and also amount of checks that they write. And Africa is still a very risky asset class. It's riskier than Europe or the US. So for the short term, if I had to bet, I would say maybe 2022 will go slightly down. Having said that, I agree, 5.2 billion sounds like a lot of money, and it is a lot of money, but we're really only scratching the surface. And another thing that's happening right now that we've seen in Southeast Asia and in Latin especially is the little mafias will start to emerge. We saw the Rappi mafia and the Lazada mafia in Southeast Asia and in Latam, which is a very successful company that reaches, I don't know, 5 or 10 or 20 billion valuation. And then the first employees of those companies that know how to scale a company, that know how to raise money, that know how to build a culture, they will start either investing themselves or funding themselves. And that will create this flywheel effect that is unstoppable, basically.
No, I do agree with you that this year is more difficult for the ecosystem than previous years, and I think we'll talk about that as this discussion goes on. But I think fundamentally, what we see on the continent is the same thing that we've seen for decades, which is a disconnect between the perception and the reality of risk on the continent. And so I first heard that with Mo Ibrahim talking about this, over a decade ago, talking about how he built CellTel as a Pan-African and telecoms platform, and about how he was able to invest and he was able to capitalize on the opportunity on the continent when others weren't, just because of that disconnect. And so what we've seen in the ecosystem, I think over the last 10 years, is that the angel investors and the early stage investors have built this ecosystem. They've proven out that in terms of making strong returns, building strong businesses, that the investment case works. We've seen institutionalization. And so we've seen the more institutional type funds that have emerged as a result of that. And then we've seen more interest from external investors. And that's built the overall ecosystem. And so the ecosystem is here to stay, first of all. I think secondly, I think as with, many things, when, last year there was capital coming in, global tech valuations were high, international capital had to work harder. And so we saw a greater influx and everybody was like, the party's here, it's great, everything's fabulous, the world's gonna go, we're all gonna become billionaires. And then you see this year and you see a change in the global cycle. And now, and there's this pessimism that, things are gonna be super tough. And I think sometimes we can overdo it on the upside and we can on the downside. And so in the long term, we'll see this consistent trend. And then around that, we'll see peaks and troughs, and we'll see changes. But for sure, the earlier investors have validated the model, and going forward, we'll continue to see capital going in.
Yes, and as we have witnessed a gradual maturation of the industry, we also witnessed a diversification of the type of investor in the industry. For example, non-traditional investor coming into the ecosystem, like asset manager investing in VC, family office, or household fund manager in the wider industry, accommodated to this diversification of investors.
Well, I think IFC should start because they are new in the club.
Yeah, let me see if my thing is on or off. Okay, great. I think first of all, it's great for everybody to see a diversification of investors coming into the industry. It's great to see more international family office type investors. It's great to see more local institutional type investors, and also the more traditional local institutions looking more at the asset class and saying, how can we leverage this? I think the key thing for managers in the industry is to partner with investor groups coming in and to work out how we can get the best synergies and how we can get the best benefits for everybody. And so I think overall, it just creates a lot of opportunity. I think within the IFC institution, we do look for partnerships, both with strategics and operational type investors coming into the continent, and also in terms of being a frame of reference for investors who are less familiar with the continent and helping them to execute on the continent. I'll stop there.
If I can just add, I think I see this from a top-down and kind of a bottom-up perspective. From a, what I say, more institutional funding perspective, historically, it's been the DFIs, it's been that type of capital. With the rise of, I guess, initially angel investors who built some track record and raised larger funds, and now they have pre-seed funds. We're now seeing people just even beyond HNIs. You're seeing, he mentioned, family offices. You're seeing fund of funds even outside the continent, looking into the continent and wanting some exposure. I think there's such incredible opportunity for diversifying that capital pool. I think we've not really had a conversation around pension funds, which are usually a huge part of institutional funding that trickles down all the way from growth to early stage. We've not had a conversation around sovereign wealth funds. The government is such a huge bank of capital. You've seen other governments across the world hold these huge portfolio investing in really high growth tech startups across the world. And from the bottom up perspective, I think this is a unique opportunity to actually have a rising up of the angel investor ecosystem on a more institutional scale. It's not so much everyone putting a check in, 10K there, 15K there. It's more like massive investor education on that level, building infrastructure, and to be honest, tech that supports that. Building, I don't want to touch regulation because I have my thoughts around the timing and how regulation has to be smart to enable a growing ecosystem. But I think that there's such a unique opportunity both ways, from the top down to the bottom up. And maybe even to the earlier point, kind of bringing this in, whilst it may seem like there's, increased risk in Africa, to be honest, an angel or an investor's game is actually really capitalizing on the risk. If there's no risk, there's no return. So the risk is important. We identify it, but I also think that in that sense, it creates opportunity. And now that there are, you know, successes that we can point to, even in the market, I guess, downturn, in the more long term, the cycles kind of go through peaks and troughs, but on cycles are 10 years usually in minimum. You don't look at just the short term. You make decisions, of course, with the market in context, but in more long term, I guess, kind of thinking about who would be the outliers and what that looks like at the end of the day. So with this point, I think there's incredible opportunity. And I'd like to add that the DFIs have done a lot of good work over time. I really do think that there's still a place for them, even as we go. I think that there are some things that the VC model just struggles with, and you know, and it's quite based on incentives. Like, think about it, as a fund, you have a 10-year life cycle, you have returns, your expectations in terms of speed and growth rate that certain industries just don't fit. And this is where you can be more deliberate about, like, the capital. Someone mentioned a question about the real industry. I still think that there's a lot of work like that the DFIs can do with, you know, basically like just the innovation, applying it, you know, meeting that speed of the ecosystem as well. But aside from that, I think there's just so much opportunity on all sides to diversify that capital pool.
I think to the extent of something that, you know, Maria just mentioned that I think is quite important is we shouldn't underestimate the growth of local investors. I mean, you know, 5 years ago, it was difficult to find an African VC fund that would come in as a first check into an African company. Today, there are so many more local VCs. And I would actually argue that local VCs play a critical role in helping companies scale. Because a lot of us here represent international VCs for the most part, but the local VCs are the ones who are going to help you when you're going to get your regulatory, when you're actually going to get your regulations, when you're actually going to be able to get follow-on funding from other local investors. They are the ones who are on the ground, who are also battling with you as you're building your company. And today, I have to commend and respect the work that African local VCs have done, because they have been the one that actually allow us to be able to be more comfortable about coming into the market and actually doing first check, co-investing with them. And we are going to see, I would hope so, a growth of that particular base through angel networks, but also just seed African funds. And that's where I feel like the DFIs as well play a critical role, because Africa still does not have that many experienced fund managers. So when they are fundraising, they need, you know, this first capital that will come in to actually help them build a track record. And for a lot of institutional financing, if you want to be a GP and you don't have a track record, it will be quite difficult to raise a fund. And that's where I feel like DFIs also play a very critical role in helping seed these funds, because we won't be able to build a healthy ecosystems if we don't have local investors.
Yeah, I mean, I agree with everything that has been said before. Maybe just to add here, I think it's all about risk and return profiles. No, if people want to get huge returns, they need to risk a little bit more. And at the beginning, obviously, it was mainly DFIs that didn't have as much financial incentives. Thank you, to put money into the ecosystem. But now we're starting to see the first stars. Now people are realizing you can make money with this. And it's not only business angels and early stage funds that are realizing this, but also later stage funds are starting to see these family offices. And they were already too late maybe for the European venture party or for the Latin American venture party, but they're not late yet for the African one. So that's what we're starting to see. A wide variety of investors that you would not see somewhere else investing in local startups. Having said that, it's all concentrated in 3 markets, or 4 maybe: Egypt, Nigeria, Kenya, and South Africa. We're not seeing it in other parts of Africa, or at least I'm not seeing it. And that will change, or should change. And I'm actually very much looking forward to that.
Can I just jump in on one point? Because I think there's this kind of conception around the DFI universe, and this idea of not seeking financial financial incentives. And I'd say 2 things. I'd say, first of all, that whole concept of disconnect between the perception and the reality of the risk. And with the mandate of the DFIs being able to invest in more quote unquote risky markets and being able to be in there first has actually provided good returns on capital, especially in the more earlier ecosystems, such as in the VC ecosystem, and especially in geographies where typical global investors have been slow to come in. And I think what you see over time is an erosion of returns as you see more other capital come in and just realize that actually, the risk here is there is risk, but the return, trade-off is meaningful. And so I think they do play a role in terms of helping to tell the story.
Don't get me wrong. I agree with what you're saying. I think you're totally right. And the fact that there was no competition, nobody was willing to put money there, made it riskier, and the return is even much higher. So, totally agree.
If I can add one point to actually Mareme's point on the DFIs being a very strategic piece on the emerging fund manager piece. I actually really agree with that because I'm a fund manager. I've gone through fundraising and it's hard, especially if you do not have that track record. I think that it's the catch-22 that founders face at the early stages that investors also face, where it's like, well, this is a great idea. Where's the traction? Tell me. And it's like, but I need money to get traction. It's even worse in VC, because if you don't have money, you can't invest, then wait. And VC is such a long game. So then wait to see the markups and then go back and then ask for money. I think that the DFIs are really strategically positioned for this because if the dry powder is there, someone made an earlier comment about, I think it was you, about how the ecosystem in the early stages, you have this early stage startups, then you have like the mafias, the operators who become investors, the founders who become investors. There is that ecosystem maturation where the talent is actually there for EMs, waiting to be seeded with capital to allow them have that proof point to pretty much build up the ecosystem. You make a very good point on the fact that that initial funnel, a pre-seed, which is what I focus on, is critical. And it's weird with pre-seed because what happens is the pre-seed funds start up with small funds, they raise larger funds because they now have track record, and then they move to later stages because no one's going to handle a portfolio of 1,000 companies. It's not going to work. And then the pre-seed is there every cycle. So it's an ecosystem issue. And I think that is such a salient point to where the DFIs could really be meaningful for the ecosystem.
Thank you, Maria. Thank you. Okay, for your insight on the positive sign of a diversification of the investor type. Talking about the opportunities from the sector perspective. So we saw that the deals in financial represented the largest share of volume and the value of the deals in 2021. So what are the other sectors that you think will be primed for long-term growth for Africa VC ecosystem?
Can I go first?
Sure. Yes, sure.
So we were actually just talking about this before this panel. I think fintech is incredibly exciting because it helps build infrastructure. And I think the continent has also many, many more problems. And one that two for me that I think are absolutely critical. The first one being agri-tech. Food sustainability is absolutely critical to being able to actually feed this growing population that we have. And it's a sector that I think is not necessarily doesn't get as charming as fintech. But I believe that it's absolutely critical for us to actually shed more light into agri-tech and that there is more funding going into that sector. The second part is going to be education. I mean, we are looking at a continent that has more than 70%, that's less than 30. What are we going to do with all of these young people who can not go to school and who cannot have access to basic education? And I think all of you here who have access to this very prestigious education can testify that education is a big factor in being able to actually build talent. And often, I think EdTech has been, with Andela, I think it's brought some light to EdTech, but I think EdTech has been overlooked for a very long time because it seemed like such a complicated issue to fix, right? How do you bring education to people who can't afford it? So technology and innovation as its root is basically going to, for me, when I look at the continent, help us solve a critical issue that we have with education, and knowing that our population is growing and our population is getting younger as we go. So how could we possibly, for me, not think about EdTech as being a critical part of how we are addressing investment? And when we're looking at sectors, not just thinking about fintech and e-commerce, but really how are we going to feed these people and how are we going to educate them?
Yeah, I mean, that makes total sense. Maybe just to add how we think about it. Obviously, I'm only a fintech investor, so it's very difficult to me to talk about anything else. But how we look at it, if we look into the Fortune 2000 companies, 500 of those are financial services without counting insurance, which is absolute number one. Number two is technology with 150. Number three is real estate with 80. And then number four is insurance with close to 100. So by far, in the amount of companies that are big in the world, financial services is just a very big part of it. And that I don't think that's ever, or I don't think it will change. Having said that, the problems that you just highlighted, it's obvious. And how we want to capitalize on it is with a thingy that we call embedded finance. So embedding financial services in day-to-day problems that can be financing of education or financing of working capital in order to buy and sell agricultural products, or any other sector that is key to Africa, embedding financial services to it. And so having said that, I believe financial services will continue being the big driver of funding in the startup world. And but we'll see many ramifications with embedded finance.
Yeah, I'm inclined to agree. I'm going to have a bit of a contrarian before I talk about like the different other sectors. I think it's very easy, I think, in the long term of things to think that something has passed when it's just in its beginning, if you really adjust it for the time scale. Fintech is only beginning. And I know it looks like it's already like it's overtold. In my mind, the rails have just been built. And it's usually like at an infrastructure that is payments. And even payments hasn't even scraped the bottom of the pool in Africa. That's one. Two, he mentioned insurance. Insurance is big in many other markets, not so much yet in Africa. There are people who are building rails for credit. Let's even leave consumer credit, which is more prolific on the continent. You're talking B2B credit, which then has several verticals. You have like financing, trade financing, treasury operations. Like no one's touched a lot. And I think as the ecosystem evolves, you will find people who have both the why, the mission, the relevant experience, and the ability to build a team to tackle that problem. And I think that happens over time. So I just want to say that please disabuse yourself of the notion that fintech is over. It's only just begun. People are building and they will continue to build. Rails have been built, yes, but there's still many things to innovate in that space. Now that's parked. I think that there's so many other industries. If you look at even the fundraising and like the growth, one thing that's very exciting to me as an investor is to almost have the privilege of seeing the future. You have people pitching these incredible ideas at the very early stage. You don't know about it yet because they're not mainstream yet. It's like people who knew Uber before, they could see it. It wasn't mainstream yet, but they knew because like you could see the team, you were backing them, you could see their growth, you could see that was incredible market pull. Health tech is one space. Yes, there are infrastructural issues, but there are efficiencies that can be gained through that. And I think that it's things from like diagnostics. I'm talking even like proper, like I'm talking IP type health tech to maybe like tech-enabled health tech to then embedded finance, like things like buy now, pay later, or things like insurance. You see these different verticalizations, even in that industry. I think EdTech, you can already even see if you look at the funding rounds, there are a few health tech companies already in the pipeline. Then you go to EdTech. I personally find, I think health tech very exciting, EdTech as well. The unique thing about EdTech is that there is such incredible market pull and willingness to pay. Now, ability to pay is also something to consider. But I think that if you look at the pipeline again, you would have heard of several rounds of financing of people who are already leading that charge in the pipeline, building really incredible solutions, tackling seemingly niche markets, but are so large because the continent is so large and there's such an unmet need. I'm talking things from like workforce readiness. Let's even go from the top, like workforce readiness. You have things like K-12. You have things like, so it's like all the way down, that is an untapped opportunity. And I think that some people say this, like in an ecosystem, it kind of starts with B2C, then you get burns and everyone goes to B2B and then comes back to B2C. I think the B2B layer is still in its early stages. There are businesses, startups, incumbents who are growing. There are fintechs that are going to enable incumbents stay alive. There are fintechs who are going to disrupt incumbents. There are fintechs, there are startups who are going to pretty much create new markets. I think that there is a huge opportunity for B2B software over time. I guess, those would be my thoughts. I think I could go on, but I just really think, please, fintech is just starting. It might seem like it's in the later stages. Yes, you're hearing all these things, but it's only just beginning, and there's so many other deep sectors. And the final point I'll make is the thing about venture capital is this cycle where I can tell you, and I think you alluded to that point, Elom, when Celtel started, he probably sounded crazy. Like, they're like, really? Like, come on. Like, it sounded crazy. And then there's outcomes and everyone's obsessed. That's what's happening to like fintech. Now there are outcomes that everyone can point to. Health tech industries, like everyone, all the investors are like, but who's the person in the market that has kind of proven this? Once that happens, you see a ripple effect that kind of, reinvigorates the system. I think we're going to see outliers. And I think with VC, it's hard to predict based on what's happened, but you can see the patterns. There are going to be health tech companies that actually become unicorns and potentially even decagons, and then everyone will be obsessed with health. And then you're going to see that happen across industries. But I just want to tell you that we're in really, really early days. It's like day one. So yeah, that was a spirited speech, but yeah.
Elom, you want to add something?
No, absolutely. And I think there's a couple of considerations around this. First of all, we've all spoken about the fact that fintech has built the enabling rails that has enabled the kind of the growth of the wider ecosystem. And without those payment rails, it would be a lot harder in terms of digitalization of the wider economy. We've also spoken about the fact that we're just scratching the surface with fintech in terms of the proliferation, various layers of different services that can be put on those rails. Beyond that, one thing that we're quite excited about is looking at the consumer play. And how do you leverage that consumer play on the continent? And so how do you leverage the demand from Africa's, several hundreds of millions of consumers and this, growing incomes play? And within that space, we've seen B2C platforms that have come along and that have provided e-commerce to the mass market. And they have had some success in terms of doing that. And they've always faced this challenge, which is the last mile distribution. And so how do you get things to, in a situation where the formal logistics infrastructure is quite fragmented, how do you solve that last mile? And then we've seen these B2B2C type platforms that leverage people like Trade Depot, who we've invested in, people like Twiga Foods, and then these social commerce type platforms, where you are looking at how does the average African consumer reach the products, reach the food products, reach that they need. And that's these local mom and pop shops, these local SMEs, local markets. And how do you take that infrastructure and how do you digitalize that infrastructure? And how do you create efficiencies up and down those supply chains to enable that whole infrastructure to work better? And so there we're very excited because these guys are solving the last mile. And these guys are able to scale significantly faster than going direct B2C. And so that's one space. The other space that Maria spoke about was this health tech space, where you see globally health spending is a significant part of GDP across the world. But in Africa, we're a much smaller fraction of that. And we've got very fragmented markets across the continent. And we've got, and as a result, in terms of being able to access scale and being able to get to efficiency, it's much harder for companies in that space. And I think as we see more digitalization across the economy, I think that's a space where we'll see a lot of growth. I'll stop there.
Thank you. So now we discussed the opportunity. I would like to go dive into the challenges that you faced. More specifically, what are the biggest challenges that you face as an investor? Are there regulatory related, macroeconomics, currency risk? What is your point on this?
I can go first. Plenty of risks and all of the above. If I had to choose the ones that you mentioned, and it depends a little bit on the country that you're focusing on. No, I mean, if we look into Nigeria, very typical example. No? There's a currency risk. No, the naira does a lot of funny stuff, and there is regulatory risk. Obviously, the central banks are seeing a lot of change, a lot of money flowing into financial services, and you need to be cautious. There is overall macro risks. No, a war in Ukraine can affect a country in Africa. Yes, it can. Things, food supply, terrorism. I mean, these are like everything can affect you negatively, and that's why it's called venture capital, no? Because it's very, very risky. What you have to identify is which risks can you mitigate and which ones are you okay living with? No, if we look into Francophone Africa, we haven't done any investment there yet. But I love the fact, for instance, that the West African franc is a very stable currency. Amazing. That one is already mitigated. What other risks are there? It's a slightly smaller market. Okay. How are the central banks there? Can you work with them, etc.? No. So you have to go through the list of all the risks that you can see and how you can mitigate them, and then just assume the risk and end up investing there. But overall, the risks change depending on where you are in Africa, and that's why for us, when it comes to regulation, for instance, it's very, very important to invest with local investors. And we're not local. We can bring the macro perspective, what works somewhere else. Who can invest into this in Series B or Series C in order to get it to IPO? We can help with that. We cannot help with talking to the regulator. That's something we leave to the locals, and they're doing a fantastic job so far.
Thank you, Nadia.
Well, I think there are many risks, like Enrique just said. The one that at least I think both as a fund and also as a person, I see as being one of the most important risks is how fragmented the African market is. There is this term that we hear often, which is specifically, I'm going to pick a region. In West Africa, we talk about Francophone Africa and Anglophone Africa. And I dislike that very, very much because I think that there are unimaginable opportunities within this entire region. And I have seen startups, wonderful Francophone startups, wonderful Nigerian startups, Ghanaian startups who could be scaling across this region and who are blocked or challenged by the fragmentation of the region. And it's something that I feel very, very strongly with. And it's something that I feel like as early stage investors, we owe our companies to help them bridge that gap. Because this is a region that's exponentially growing. And we are looking at smaller countries in one part and kind of two larger economies in the other. And there are so many issues that they have in common. But this language barrier, in addition to a regulatory issue, is creating a separation that I don't think should happen. And I was telling Elom, when I went to Lagos, to Nigeria, I actually have never heard people be as interested and eager about Francophone Africa as I've heard people be in Lagos. But they just don't know how to access it, right? So they see it as an opportunity, but they feel like there are barriers to get into that market. And that's something that early stage investors, we kind of need to help our companies think through at the very beginning. But again, it's difficult for us to do that, for instance, at 500 being so global, because we are not as hyper-local as some of the other local funds. And that's a very big challenge for us. And especially because the way that we go about investment today at 500, we have about 2,600 companies in our portfolio. So it's very difficult for us to have this very micromanaging approach to companies, because we just have a lot more of a high scale investment strategy. And that's why we need different funds to be acting very differently when it comes to companies, and help them address that. And for us, it's very much something that we're seeing. And of course, I mean, there are other regions that also feel just as fragmented. So between West and East Africa, that's another issue. North Africa and Sub-Saharan Africa, there is a lot of work that we need to do to bridge this gap. And I think it is our responsibility to help this African market actually be a market, because right now it's not.
Yeah, no, I won't add too much to that. I think I think the biggest challenge we see is generally on the macro side, and it's, I think globally, as we're going through the global cycle, as we're seeing the US rates, that, how that's translating into local markets and creating challenges on the FX side, creating challenges on the external account side. They're challenges, but I think that over and above those, I think taking a macro view and taking a thesis-led approach is the way to best manage those risks, because the several success stories show that the opportunity is far greater than the challenges that our companies face. And so it's just a question of being ready to understand that there'll be ups and downs, and it's taking a macro view.
Yeah, I can just add one more thing. And I think, Elom and Enrique and Mareme, they've kind of covered like the macro bit. And I agree, like general sentiments, agree. I think there is one on the micro bit that is rarely spoken about, but fundamentally, I'm beginning to kind of think about more and more. And I think this is down to things along the lines of talent, along the lines of just even founders themselves scaling as people. Eventually, not one person builds a business. Teams build businesses. And there is an art and a science to building a team that scales a market team, especially with the nuances that Mareme has mentioned of the fragmentation of the market. If you're going to dominate Africa, at some point, you're going to have to get talent in a particular region that you don't have the expertise. And that brings a very nuanced point around like talent. Now, two sides to this. In the bull market that we're kind of getting out of, talent was a problem. Ask any tech startup on the ecosystem. People were leaving in droves, couldn't afford the developers. Operating skills, like in terms of people who have skilled startups, there was a demand supply skew, driving prices up, increasing burn. Now we're in this world where that's kind of, I feel like the lag effect will come sooner, maybe later rather than sooner. And we will find that maybe the cost is going down, more people in the market. But I think that founders for the next, wave, if you're going to build a global company, there is a certain type of skill set you need to build that. And you don't learn this. It's a lot of coaching, experience, learning on the job, peer mentorship. It's a lot to scale yourself as a person that leads a team, starting from the situation where you were coding in your basement with a couple of your girlfriends, or you had an idea and you built a little team. And I've seen personally founders that I've supported struggle with that. It's like 1 minute you're killing fires, the next you're having to think about culture, you're having to think about pipeline, you're having to think about layoffs, you're having to think about fundraising. Oh, let's not even start with that. So I think people don't talk about this point, but this is a point I think the ecosystem needs to really sit down and think about what ways we can support the founders to scaling themselves and building the infrastructure that they would need to scale global companies. So that's stop there.
Thank you. Thank you for your insight. I will pause there and take some questions from the audience.
Hello, everyone hear me? Hello? Oh, yeah. There we go. Hello, thanks everyone. Thanks for that great discussion. Mareme, I just want to point to you and just to say that, you know, everything you've said was pure music to my ears. I've just completed the Oxford University Innovation Startup Incubator, and I'm actually focusing on a solution, an EdTech solution for students in South Africa to provide easier financial access to educational loans. I mean, obviously, you know, South Africa has been ranked as one of the most unequal countries in the world. And a large part of that comes down to the education of students. So you also mentioned that, you know, there's a need for EdTech. And Maria, you also said that, you know, you have a few EdTech startups in the pipeline. But is there a willingness of VCs to actually invest at this stage? You know, there might be a need, there might be a few in the pipeline, but, you know, especially VCs investing in EdTech in Africa.
So from a 500 perspective, we've always been very adamant about being sector agnostic. And a lot of different funds have different strategies because they are also thinking about return, and they're also thinking about what's viable and what makes sense for the market. But the way that we like to think about it, and the way that we've seen it to happen in Latin and Southeast Asia, for instance, is when you're coming into such a nascent market, you have companies like yours who may be solving some of the more critical issues that the mass experiences, but who may not get the same type of attractiveness just because there are very little proven models looking at it. And that's why we've always wanted to take a sector agnostic approach. Now, when I look at our portfolio on the continent, we've invested in so many different companies that have not all been related to fintech or e-commerce. We've invested in edtech, we've invested in health tech, we've invested in logistics. We've even now just recently done an investment in robotics. So we are very adamant about wanting to diversify our portfolio because Africa is still such a nascent ecosystem. Now, of course, the investor rationale is that we look at certain business models that have proven to work in other countries. And we do have to do that from a perspective of we want to also find the best companies. But from an investment perspective, I don't think that I think you would be surprised to see how many investors have an appetite for edtech. I know so many investors who are looking actively to do deals in edtech and health tech in particular, and who are having a hard time finding these companies because maybe there is like a sentiment of shying away. And that's where to Maria's point earlier, I think fintech still has so much potential. Like you said, I think we're like maybe day one. But I also would like the other sectors who are at day zero to know that we want them to get to day one. And I would not want to create an ecosystem where there would be a perception that fintech is the only attractive sector, because that's not the case. It's a very, very attractive sector, but so are many others. And the narrative, I think, like Maria said earlier, right now is very fintech driven just because everybody's actually seeing some success stories come out, but it will diversify. And that's also where we have to participate in making it diversify by saying very clearly and by stating as loud as we can that we are very excited about fintech and we're very excited about many, many other sectors. And I would hate for someone like you who is building a net tech to think that there is no appetite for a company like yours, because there is, and there will continue to be.
If I could just add very quickly, I think, to be fair, VCs, it's implied in the name, capitalists are very greedy. Like, we look for the large outsized opportunity. anywhere. Yes, there's fund thesis and like restrictions around what you can invest in. But even with fund thesis, you would find fund managers who, if they see an incredible opportunity, they will jump on it. What you're experiencing, in my mind, is kind of how fintech started many, many years ago. I remember when the Paystacks, the Flutterwaves, the Waves, when they didn't exist, it was the traditional banks. In Nigeria, the closest to it was InterSwitch. In South Africa, it was like the digital banks that came out of parallels of existing banks. In those days, they also had to make a case. I bet if you got the founders on a panel, they would tell you, it's probably much easier to raise right now than it was then. And I think that's where the outsized opportunity is, even for a founder, because you are building wealth for yourself in the long term. I think I definitely understand the sentiment of having to explain more, but at the end of the day, a VC wants to see, is this an outsized opportunity that can return my fund in 10 years? And can I back something that I don't know how big it could get, but I know that it could be incredibly big? And I feel like as a founder, no matter where you find yourself, in the bear or the bull market, focus on that. Like really narrow down like how large this opportunity is. I guess in line with the fund thesis, depending on the fund, what success looks like could be a bit different. But I think it's the natural, would I say, it's kind of like the natural life cycle of certain industries. And hopefully when, the initial sets of founders kind of do that, it becomes easy and the cycle is repeated. It's unfortunate, but I would say that a VC will invest if it looks big enough and if they feel like you're the right person to do it. And if there's, it's kind of bonkers for them to say no. So, I mean, with many caveats there, but I would say that, yeah, just keep at it. And to Mareme's point, I don't think you should have any sense that VCs are not interested. It's not exciting to them. Go there and pitch it out. Tell them what you're trying to build. Paint the picture of that, amazing outcome. And you probably will tell that's something that you can kind of then pull through. That's what I would say.
And if they don't think that it's exciting, maybe they're just not the right investor for you. Yeah. So you want somebody who believes in you, who believes in your business, who believes in your sector. And if they don't think so, then you might not want to take money from them.
Thank you. So thank you. We'll take one last question.
Okay, just very quickly, we're going to take one last question and then we're going to round up.
Thank you.
Hi, and thank you for this great discussion. My name is Fatou Gueye. I'm from Senegal and I work at the US Embassy in Senegal as a program manager. And my work basically is to work with 7 West African governments to improve the business environments. So as a policymaker, my question is, what do you think we can do to mitigate the risk or to create more incentives for investors and startups? Thank you.
You want to take that?
From a regulatory perspective, I think that it's often very challenging in terms of understanding the regulatory landscape and understanding the application of regulation across an industry, and so being able to be clear as a founder in terms of what is it that I actually need to solve for. And we see this particularly if you look at the fintech space, and particularly if you look at somewhere like Nigeria, where various payment regulations, various regulations on the banking side, what's your licensing, and being able to harmonize and being able to come up with a clear regulatory framework, I think is helpful. And also trying to lessen the burden of regulation, because I think the challenge that a lot of founders are looking to do is, how do I solve problems? And I think often having to deal with the various regulatory bodies and having to is challenging. I'll stop there. Yeah.
Maybe I can add an example. I agree with what has been said. An example of a country that has done it very well is France, actually. If we look into the venture space in France in 2018, 2017, 16, it was very far away from Germany and the UK. And then Macron started this one program by which for every euro your startup raises, the French government will give free money at 50% of that euro. So that means that if you're raising 3 million, we've got 50% of that on top for free. So that is very attractive for investors. And because you're able to take a riskier bet, but you know that the company will have more runway, more time to try and error and do mistakes with that money. And now we're seeing that France is looking to surpass Germany in the venture space in Europe. And nobody would have said that a couple of years ago. So regulation, 100%, but really putting your money where your mouth is can also really help.
Well, assuming that African countries don't have this type of capital to do these type of incentives, I think incentives are definitely part of the answer. But I think also thinking around like basically building sandboxes. I think it's really important to be able to, so it's basically like everybody's in a dark room and everyone is trying to figure this out as we're building it. And I think that mindset perspective is very important because the regulators, the government, the policymakers are trying to catch up to the growth of innovation and tech on the continent. So as we are building, we are also trying to figure out what makes more sense from a regulatory and from a policy perspective. So creating these spaces where basically policymakers and startups can test out things together and work very closely in order to be able to build that landscape is quite important. And I think from an incentive perspective, of course, I think African countries have stronger issues on being able to build some of these incentives just because they either don't have the capital or they don't have some of these resources. But I think dedicating more time building sandboxes will make will at least have them build a clear path towards creating like more startup friendly environment.
I can add just one more thing, and maybe even coming from like an operator perspective, because I was in fintech for 3 years, interacted with the regulators. Even I'm a part of an association that's trying to dialogue with the regulators. So I think this policy is one where the impact could be so huge, and it doesn't even have to be a serious thing. It could be a very little thing. In Nigeria, for example, BVN literally unlocked. That's the rails to which everyone else is kind of building. I mean, it's evolved over time. But it's so interesting how something so simple could have so much impact. It's very interesting, but I would say that first, the government should just learn to stay out of the way. Just for a bit, because the thing about, I say this from a perspective of there's a natural tendency to overregulate in the early stages, and that can kill an ecosystem faster than anything. You are the government, you wield a very huge power. So I think to the extent of having the knee-jerk reaction to regulate anything, anything that you don't understand, the first thing is to just maybe take a beat and see how the market is evolving. The other thing I would say is, and I've seen this in other markets, and Enrique has touched on it. Even in the Nordics, you have banks that pretty much guarantee loans to startups, and that just pretty much opens up the early stage. There's going to be a lot of failures, but then out of that, some businesses are able to come out of that then become, potentially VC backable. And the third thing I would say, which is even to your point earlier, it's like, not every business is VC backable, and that's fine. I feel like there's also this obsession with venture capital as an industry. It's very peculiar. It's a 10-year life cycle, looking for unicorns. In that sense, you have to say no a lot, even if it's great. I think the government could begin to explore ways to support industries that don't necessarily, have to go the VC route, even if it's not our first, if ever. And these are also successes in their own right. So I think, that obsession with VC capital, it's great because the outcomes have, shown that they're very lucrative. But I think success can look many different ways. So I think the government could think about policies to enabling entrepreneurship at that level, to build the pipeline, so I pretty much allow, whoever's not going to make it, not make it, but those who will succeed and I guess impact the economy in a reasonable way without having to rely on venture to do that. So yeah, that's what I'll say.
Thank you very much for your participation.